September 2008. In a single night, a decision made behind locked doors erased $10 trillion from global markets and triggered the largest wealth transfer of the century. Trading screens bled red, phones rang across continents, families lost their homes before they even knew it was happening. While the world watched Lehman Brothers collapse, one detail stayed hidden. Some players were already betting against the very system they built. They knew the crash was coming, and they positioned themselves to win. Behind the headlines, shadow funds placed contracts that would only pay if millions lost everything. The public believed it was an accident, but a small circle was quietly rewriting the rules of power. Today, you'll uncover how the crisis that broke the world became the blueprint for those who control it. And this is just a beginning, because what comes next is the story of a crash nobody saw coming. Or did they?
They called it a storm no one could predict, but the warning signs were everywhere. In the early 2000s, U.S. banks flooded the market with subprime mortgages. Loans were given to people who could never pay them back. No checks, no limits, no accountability. Housing prices skyrocketed, and Wall Street packaged these risky loans into complex products, mortgage-backed securities and CDOs, sold worldwide as if they were safe. The profits were enormous. The risks were hidden. Credit agencies rated junk as gold. Regulators looked away. By 2007, cracks appeared. Home prices stopped rising. Defaults surged. A few analysts sounded alarms, but their warnings were ignored. The financial machine was making billions, and no one wanted to stop it. Then came the shockwaves. March 2008, Bear Stearns, once worth $20 billion, was sold for $2 a share in a rushed rescue by JP Morgan. July, IndyMac Bank collapsed, triggering the third largest bank failure in U.S. history. September 7th, Fannie Mae and Freddie Mac, holding half of all U.S. mortgages, were taken over by the government. Fear spread like wildfire. And then, September 15th, 2008. Lehman Brothers, a 158-year-old titan, filed for bankruptcy with $600 billion in debt. It was the largest bankruptcy in U.S. history. The world stopped. On Wall Street, chaos erupted. Phones rang non-stop. Traders shouted into the void. Screens flashed red. The Dow Jones plunged 777 points in a single day, its largest drop at the time. Banks froze credit lines. Companies couldn't pay suppliers. Global trade slowed to a crawl. Ordinary people felt the shock soon after. Unemployment in the U.S. soared to 10%. Pensions evaporated as the S&P 500 lost nearly 40% of its value. Foreclosures hit a record, 3 million homes lost in 1 year. Families stood in lines outside banks, only to find locked doors. Everywhere, the same question: how could this happen? But while millions suffered, others were cashing in. Hedge funds like Paulson and Co. made $15 billion betting against the housing market. Goldman Sachs quietly shifted its positions, profiting while advising clients to hold toxic assets. Insiders used private data to place trades that only paid if the economy burned. This wasn't an accident. It was a collapse, and it was profitable for the few who saw it coming. Behind closed doors, a new game began. Central bankers, CEOs, and government officials met in secret. At the Federal Reserve, emergency meetings stretched through the night. AIG, the world's largest insurer, received an $85 billion bailout to avoid total collapse. Decisions worth trillions were made in hours without public debate. No vote, no transparency, just signatures. And with them, the economic future was rewritten. Who knew? Who allowed it? And who was already preparing to rebuild the ruins for their own gain? The public was told no one could have predicted this. But the truth? Some predicted it, some planned for it, and some walked away richer than ever while the world drowned. The crash wasn't the end. It was the first move in a game most people still don't know exists. If you're still watching, you've already stepped where they don't want you to be. Drop a like, not as a gesture, but as proof that this truth won't stay buried. Stay here, because in the next minutes, you'll see why the so-called rescue was never meant to save you. It was engineered to protect them, and it changed everything. When the markets collapsed, fear spread faster than the virus of greed that caused it. The world believed the worst was over after Lehman Brothers fell, but the real game was only beginning. Behind locked doors, the U.S. government and the Federal Reserve prepared a response unlike anything seen before. Officially, it was called a rescue. In reality, it was a transfer of unimaginable power and wealth. The numbers were staggering. The Troubled Asset Relief Program, TARP, injected $700 billion into the banking system. But that was only the visible part. The Federal Reserve quietly created lending facilities that funneled trillions to Wall Street. Not millions, not billions, trillions. Later investigations revealed that $16 trillion in secret loans had been issued to banks and corporations worldwide. While families waited for help that never came, banks were handed lifelines with no conditions. CEOs whose firms were on the brink walked away with bonuses. Goldman Sachs, Morgan Stanley, Citigroup, Bank of America, all lined up, all saved. Even foreign banks received massive injections of U.S. money. The public narrative spoke of saving the system. But what system? The one that had failed millions, or the one that kept the elite protected? AIG became the perfect symbol of this hidden rescue. After taking billions in taxpayer funds, it quietly paid $165 million in executive bonuses, rewarding the very people who engineered its collapse. Anger erupted, but the payment stood. No one was punished. Behind the scenes, the bailout reshaped the financial map. Weak players were absorbed by stronger ones with government support. J.P. Morgan Chase acquired Bear Stearns and Washington Mutual. Bank of America swallowed Merrill Lynch. Power was no longer just concentrated, it was fortified. The rescue wasn't for homeowners. Foreclosure programs were slow, underfunded, and ineffective. Families lost houses while Wall Street rebuilt balance sheets with public money. By 2010, U.S. home ownership had fallen to its lowest level in decades, while bank profits roared back. Politicians called it a necessary evil. They said without these moves, the economy would have collapsed entirely. Maybe that's true, but the terms of the deal were clear. Losses were socialized, profits were privatized. The public carried the risk, the elite reaped the reward. For ordinary citizens, the narrative ended there. The bailout worked, the crisis passed. But what they didn't see was how this moment rewired the entire financial system. New regulations were promised, but watered down by lobbying. Interest rates stayed near zero, fueling the next wave of speculation. And those who had been too big to fail became even bigger. The hidden rescue was not a bridge back to normality. It was a gateway to a new order, one where power was more concentrated than ever before. The question no one asked, if the system had truly collapsed, who would have lost the most? The answer explains why it was never allowed to happen. Because while the public was told the rescue saved them, it was always designed to save someone else. And in the next moments, you'll see how those who survived the storm didn't just recover. They rewrote the rules of the entire game and made sure no one could challenge them again. When the panic faded, the public believed the danger was over. Markets stabilized, banks reopened, and politicians claimed victory. But while the world exhaled, A quiet transformation was taking place, one that would redefine who controlled the system. During the chaos, power shifted in silence. Hundreds of smaller banks failed, vanishing from the financial landscape. The survivors, J.P. Morgan Chase, Goldman Sachs, Citigroup, Bank of America, emerged bigger than ever. They were no longer just banks, they were the system. Regulators promised reform. Leaders stood in front of cameras declaring, "Never again." But in Washington, another story was unfolding. Wall Street's army of lobbyists spent over $1 billion in the years following the crash to influence legislation. They rewrote the details of every law. The result was the Dodd-Frank Act of 2010, a law that looked tough on paper but was full of loopholes. Its most threatening provisions were delayed, diluted, or dismantled. By the mid-2010s, many of its rules had already been rolled back. Meanwhile, the Federal Reserve injected trillions into the financial system and kept interest rates near zero for years. This flood of cheap money was supposed to fuel recovery. Instead, it fueled speculation. Corporations borrowed at almost no cost, not to create jobs, but to buy back their own stock and inflate share prices. Wall Street roared back to life, while ordinary wages flatlined. The gap between rich and poor widened at record speed. The influence of finance spread far beyond U.S. borders. Hedge funds and private equity firms used the crisis to buy distressed assets around the globe. Entire blocks of foreclosed homes were snapped up by corporate landlords like Blackstone, turning former homeowners into renters. The recovery was built on ownership of the few, but debt for the many. This wasn't a return to the old system, it was a redesign. A model where losses are shared, but profits are privatized, where too big to fail became too powerful to challenge. Even politics was rewritten. Campaigns were increasingly financed by the very firms that had been rescued. Financial executives moved into government positions, shaping policies in their own interest. When decisions were made, they were made with one question in mind: what does the market want? For the average person, life moved on. The headlines faded. The crisis became history. But behind the scenes, the rules had changed forever. Those who survived the storm had not just recovered, they had fortified themselves against any future threat. Who truly benefited from this redesign? Who became untouchable? And who was quietly taking control of assets the world thought were lost? Because this wasn't just survival, it was consolidation. The real winners were not on the front page. They were moving in the shadows, shaping markets, laws, and governments themselves. When the panic subsided, the public believed the storm had passed. Wall Street reopened. Governments injected trillions, and the headlines faded. But while the world relaxed, a silent power shift was already underway, one that would shape the next decade. While millions of families lost homes, jobs, and retirement savings, a small circle of players seized control of assets at prices no one else could touch. Hedge funds, private equity giants, and insiders tied to the rescue turned the wreckage into the deal of a lifetime. Blackstone bought over 50,000 foreclosed homes, converting entire neighborhoods into rental empires. Families who had been forced out returned as tenants, paying rent to the very corporations that profited from their loss. Cerberus Capital and Lone Star funds quietly followed the same path, acquiring distressed mortgages and flipping them into profit. Goldman Sachs emerged untouched, even stronger. While its clients drowned in toxic securities, Goldman had secretly bet against them, earning billions. After the collapse, it rebranded as a bank holding company, unlocking access to Federal Reserve emergency cash and embedding itself deeper into the system. Hedge fund legend John Paulson became a symbol of crisis profiteering, earning $15 billion by shorting the market. Apollo Global Management, Carlyle Group, and others scooped up collapsing companies, building empires from the ashes. Across the Atlantic, Barclays absorbed key parts of Lehman Brothers. UBS and Deutsche Bank received billions in hidden support, ensuring their survival. And then there were the central banks. Through near-zero interest rates and quantitative easing, they created trillions in liquidity. Asset prices soared, stocks, bonds, and real estate doubled and tripled in value. But ownership of these assets was concentrated. The rich grew richer at historic speed, while wages for ordinary workers stagnated. Inequality reached levels not seen since the Great Depression. The power grab went beyond money. Survivors gained political dominance. Executives stepped into government roles. Lobbying skyrocketed. By 2013, just 5 U.S. banks controlled nearly half of the nation's banking assets. They became too big to fail, too big to jail, and too powerful to regulate. Meanwhile, Europe was burning. Greece plunged into debt crisis. Spain faced 25% unemployment. Austerity programs crushed millions, while European banks were quietly propped up with emergency funds. The same playbook repeated. The public paid the price, while elites consolidated control. This wasn't a recovery. It was a redesign of global finance. The winners didn't just bounce back. They rewrote the rules so they could never lose again. By the mid-2010s, their influence reached far beyond markets. Policies were written with markets in mind. Tax havens protected their wealth. International agreements favored capital flows over citizens. The line between state and finance blurred into invisibility. For ordinary people, 2008 was a crisis to forget. For those behind the curtain, it was the opportunity of a generation. They didn't just survive this storm. They built an empire that still shapes your life today. Because 2008 was not an accident. It was a turning point, and the order born from it still grows in the shadows. And here's the question they hope you never ask. If they could seize control during the last crisis, what do you think they're planning for the next one? The 2008 crisis wasn't just a financial disaster, it was a reset, a moment when the rules were torn apart and rewritten, not for everyone, but for the few who knew how to play the game. They walked away stronger, richer, untouchable. And today, you live inside the world they built in those dark rooms. Every market move, every economic shock, every unexpected event plays by rules you were never meant to read. The truth is simple. The system didn't fail. It worked exactly as designed, just not for you. The next crisis is not a question of if, but when. And when it comes, the same question returns. Will you be just another piece on their board, or will you understand the game they're playing? If this investigation opened your eyes, make sure this truth reaches more people. Tap like, subscribe, and stay here, because what comes next will expose even deeper secrets the system is still hiding. You've stepped into a world they never wanted you to see. And this is only the beginning.